Hi class, this is Mr. Tan, and we're at LCCA at the moment on the third floor, so you can see this lovely building. Okay, so we're looking at the difference between Gaap and IFRS, but we must remember that Gaap and IFRS is really used for financial accounting as opposed to the different side of management accounting. Now, IFRS actually stands for the International Financial Reporting Standards, and Gaap stands for the Generally Accepted Accounting Principles. So you've got Gaap and you've got IFRS. Now with Gaap, Gaap is predominantly used in the US, whereas IFRS is used in over 110 different countries throughout the world. So we can see the big differences between Gaap and IFRS. And it's very important to understand which financial accounts and what standards are being used when the financial accounts are actually being produced. So when we're producing the financial accounts, it's important because we want to make comparisons between industry standards or comparisons between different companies in the same area. But in order to do that, we have to know the basis on which the principles are calculated on. When we look at the differences between Gaap and IFRS, we can see them in predominantly three different areas. Firstly, we can see them in terms of intangible assets. When IFRS is calculating intangible assets, they are looking at a calculation in terms of fair value. However, when Gaap is looking at it, Gaap is looking at it in terms of fair value, but IFRS is looking at it in terms of a future benefit or future value that has. If we look at things like research and development and things like advertising, we can see that in IFRS there could be an intangible asset here for the future, whereas in Gaap this wouldn't exist because Gaap bases it on fair value. The other area is in terms of inventory costs. Now, inventory costs, IFRS actually uses last in, first out method, and Gaap uses the last in, first out, but they also use first in, first out. And this can have a potential impact in terms of the value of the write-down or value of the inventory stock. And depending upon inflation, if last in, first out is used or first in, first out is used, it could actually increase or decrease your gross profit margin depending upon if inflation has increased or decreased. And then the last area of difference between Gaap and IFRS can be seen with regards to write-downs. With write-downs, with IFRS, there can be a reversal in terms of the write-down value of an asset, which can be reversed on specific conditions. But under Gaap, there is no option to reverse the write-down value of an asset. So when we're looking at IFRS and Gaap, we can see that there are big differences, and it's important to know. When we relate these specifically to the income statement, balance sheet, and the cash flow statement, we can see that the balance sheet and income statement, there's not too much differences apart from different names being used in both these financial statements. But in the cash flow statement, in terms of operational activities, there is a big difference. Gaap starts off with the net profit, whereas IFRS will not have the net profit. It will break these down in terms of receipts and details which are being paid out in terms of the organisation. So we can see a big difference in terms of how it's broken down in the cash flow statement, but predominantly in the balance sheet and the income statement, they're predominantly the same, apart from different names being used. So let's just recap what we know. One, there are two financial accounting standards, which is different from management accounting. And these include IFRS, International Financial Reporting Standards, and Gaap, Generally Accepted Accounting Principles. Gaap is predominantly used in the US, whereas IFRS is used in or with 110 different countries around the world. Gaap is predominantly rules-based, and IFRS is predominantly principle based. We can see differences between the two in terms of intangible assets, in terms of inventory control, and in terms of write-downs. We can see that IFRS stands for, International Financial Reporting Standards, and Gaap, Generally Accepted Accounting Principles. And the main differences is really going to be shown on the cash flow statement in terms of the Gaap showing the net profit and IFRS which doesn't. So I hope that has helped today. Okay, many thanks today.